What the fuck is up, YouTube? Welcome back to another trade recap. Today is Wednesday, February 4th, and we took a pretty good dub today, continuing our win streak on the week. Passed a couple of those evals that I was trading on today. I got a couple more Tradeify accounts under my belt. Tradeify accounts are also on sale right now, as I mentioned yesterday, but I'll leave a link in the description if you want to check that out. But without any further, let's go ahead and just hop right into this, guys. So pretty much, excuse me, first thing I was looking for coming into open, or right when we're about to open, is, as you guys know, 1 hour and 4 hour fair value gaps. I'm gonna go ahead and cut off this, right? So first thing I'm doing is identifying my higher time frame bias. My higher time frame bias coming into today was very bearish for a couple of reasons. Number one, we had a 4 hour inversion right here. So on Monday, we had a huge rip, and then yesterday we had a huge dump. This 4 hour gap from Monday got completely just blown through on the 4 hour time frame. We held a little bit off of this low, but overall we are extremely bearish with how much bearish movement we had yesterday. We also inversed that gap, and you can see that we are just overall bearish. I mean, it's pretty self-explanatory why I had a bearish bias coming into today. I also marked out this 4 hour fair value gap that we were starting to show some rejection out of, and then I was looking for my draws on liquidity. My first draw on liquidity was right here, and here. Right here, you could really consider these about some relative equal lows if you wanted to. Relative equal lows, draws on liquidity, right down here, draw on liquidity. All right, guys, the main thing that I am looking to get correct on my trading is my higher time frame bias. Whatever my bias is going into the day is pretty much the only side I'll look to take. Price is choppy, I'll sit out, but if we get an A+ setup, which is going to meet all of our confluences, which is the 4 that we've gone over, which is the higher time frame bias, a rejection out of a higher time frame gap, which is an hourly gap or a 4 hour, a 5 minute to be formed within the trend that we want. So in my case, I was looking for a 5 minute downtrend or a 5 minute fair value gap to form within the downtrend, that to get respected, and then a 1 minute inversion to the downside. While I was also, this just looks so good for short today. As we were bearish, we had relative equal lows here, a pretty good, amount away. Next thing I do, I hop onto the 1 minute time frame, and I go ahead and I wait for market open. And I also see when we open and where we are relative to London and Asia levels. I saw that we had an untested London high up here, which was also back into this 4 hour gap that we had marked out from before. But we pretty much had an untested Asia high. Since we already were getting rejection out of this zone up here during London and kind of in this area, right? During Asia, we barely tapped into right here, rejection. So this 4 hour gap that we had marked out was extremely good for us to see that we were rejecting out of, and confirmed that bearish bias even furthermore. What I was looking for now coming into open, I'm hopping on the 5 minute time frame. First thing I'm looking for is a 5 minute fair value gap to be formed. Let's see if that happens. We chopped around for quite a bit. First 5 minute fair value gap forms right here. Now I was looking for this setup. I wanted to see us respect this zone, right? If the 5 minute closes above this, that would be a bullish inversion, and that would invalidate the setup. We did end up holding this zone for a little bit, but then we closed above right there. So that setup did unfortunately become invalidated. Right here, this little bit of rejection, if there was some kind of 1 minute inversion, I would have taken shorts right there and they would have got stopped out. Luckily, there wasn't a 1 minute inversion, so I didn't end up taking that trade. However, I still was extremely bearish. Now, I bet there's a lot of people that hopped into longs right around this area for a couple of reasons. Number one, I know a lot of people like to say that we were overextended to the downside, which I don't completely disagree with, but we did take out these relative equal lows that we talked about just a second ago. And then we did break structure to the upside technically on this 5 minute candle closure. And we did inverse this fair value gap right here with this candle closure right here. So this was honestly not a bad spot for longs. If you took longs here and you're a reversal ICT trader or something like that, I honestly don't hate that setup. But for me personally, I thought our draw was so insanely strong to come down to this draw on liquidity from it looks like last week. So that's what I was targeting, where I really thought price wanted to come up to. If you took longs here to try to target up to that untested London high or backups in this gap to fill this gap, I honestly don't hate that. Now, I did take this trade on an eval, so like I've been explaining, I haven't taken any trades on my actual funded accounts this week at all, because I haven't got any A+ setups. There actually was an A+ setup today, but by the time it arose, I was already off the charts and playing some arc raiders, but we're gonna go over that in a second. But here's the trade that I actually did take, guys. So after this 5 minute got got inverted right there completely. I was still looking for shorts. Pretty much I hopped down to the 1 minute time frame. As soon as I saw us sweep this internal high right here, which is probably a lot of people, you have to think about it like this. There's a lot of people that probably entered shorts right here because they're like, oh, okay, you know, my draw on liquidity is still down here. We're in this downtrend, you know, down, pull back down, pull back down. They think that's going to be the next break. Everyone that enters shorts in right here has their stop loss right here. I call that an internal high. As soon as we take out the internal high and then get an inverse of this 1 minute fair value gap right here, that's actually the entry I took. So I took a short right here and put my stop loss at this high, and I targeted low of day. Well, I didn't actually target low of day. I targeted like a 1-to-1 because I just needed a little bit. I needed like 400 bucks just to pass these handful of evals that I was trading on. That's the trade I took, and that ended up getting hit right there. I will say this was a very risky trade. Number one, because it was right after this 5 minute fair value gap right here got inversed after we took out these, after we swept these levels of liquidity. But pretty much anyone that was in shorts, we pretty much had this internal liquidity level that we got swept, and then we inversed the 1 minute. Obviously, like I was explaining, I was just still extremely bearish on the day. Thought we were going to come down. This was my ultimate draw on liquidity on the day, which ended up getting hit right there at 1140. But I want to show you guys the A plus setup that actually did occur that I would have taken on my actual funded accounts, my live accounts, not the evals, if it did appear sooner. Hop onto the 5 minute and same thing. So we're looking for a 5 minute gap. That one got invalidated right there. We're just going to wait for another one. Let's see if we can get another one. Remember, our draw is still down here. After this draw got taken out, I probably would be done because that's my lowest draw for a while. After that, I mean, not even. I guess we have this too. Okay, maybe that, but I was mostly looking at that one right there. So let's see. We're waiting for a 5 minute gap to be formed, and it looks like one gets formed right here. So boom, I would now at this point mark that out. So guys, what the 5 minute fair value gap does is number one, confirm structure to avoid fake outs, and it also helps you to avoid getting stuck in a choppy area, right? Entering a short position here, as I did, it was a little risky, or any position here while price is kind of chopping around. Keep in mind, this is on the 5 minute. That's some very choppy price action on the 5 minute. Now what I want to see right here, this would be an A plus setup, is that 5 minute fair value gap to get tapped into and then respected. As long as it doesn't close above, that's a respect. Okay, boom, that gets respected. Now I hop onto the 1 minute time frame and I look for an inversion within that. Inversion right there on this close. Entry right there, stop loss at the high. You would go break even as soon as we take this out. So you would be break even right there. You would probably target that draw for exactly a 1-to-1. You'd be break even right there, and you would actually unfortunately get stopped out break even on that trade, but this thing did end up hitting, so never mind. I mean, it wasn't that is an A plus setup. You would have got stopped out break even on it after being up about 40 points. That kind of sucks, but that was an A plus setup right there. So I guess it doesn't really matter if I took it because I would have got stopped break even anyway, guys. But that's pretty much the setup. Let's see. I'm just curious now. Okay, that got inverted. If this respects, okay, like maybe this right here. So boom, that got respected right here, and then we look for a 1 minute inversion. The 1 minute inversion would be right here on this close. That's another A plus. This is another A plus setup right here. And yeah, right, because we inverted the gap, that gap right there, and that gap right there on this candle close. So that would be a 1 minute inversion after respecting that 5 minute. Furthermore, continuing this downtrend with our obvious liquidity draw right there. Higher time frames, obviously bearish. We're staying with that trend. Stop loss is going to be right at that high, and then you could probably target low of day, or what I would do is target right here and then go break even at low of day, and then that hits. Wow, that hits really fast. And then we just took out that last draw. Today, guys, honestly, just beautiful price action. I think that we did start to reverse a little bit. So guys, pretty much what really saves you a lot of times from getting faked out is the 5 minute gap. For example, down here, this would be another technically A plus setup, even though I don't think it actually occurred. Right here, another 5 minute gap formed. So that's what already. So I took this dub up here that was a little riskier, but if you stayed on the charts a little later from around 11 to 12:15, those were two A plus setups. The first one got stopped out break even. This one hit a full TP of 106 points for over a 2.2 RR, which is obviously like insanely fucking good. And you guys can already see how cracked this win rate is already, especially on trendy days like this. And honestly, how we have been the whole week. Monday was super bullish, yesterday super bearish, today super bearish. So it's very easy to catch very high quality, high probability setups with this strategy on trend days like this. And we're just playing in continuation. But guys, I'm going to show you how good this 5 minute thing is. So we had that 5 minute gap right there. Then if we drop down onto the 1 minute, we would look for it to get respected. And then we look for a 1 minute inversion. There is no 1 minute inversion at all here. Nope, nope, nope. Technically, that is a gap right there. If we closed under there, we would get it. But at this point, the 5 minute already inverted back up above that fair value gap, invalidating that setup. So you would no longer be looking for that trade. And lo and behold, that is right where we start to reverse. Just goes to show you really how good having a good set of rules and good set of confluences is, because that 5 minute fair value gap respect paired with the 1 minute inversion is pretty much going to allow you to, number one, avoid fakeouts a lot of times. And number two, it's just going to give you very high quality setups and high probability setups when you do it right. The trades that I've went over today and yesterday that I actually took were high risk just because I didn't wait for it, but that's just because I was on evals. On my actual funded accounts, this trade and the one that got stopped out break even that I went over right before that are the ones that I actually would take. With that being said, guys, link in the description for Tradeify accounts at 30% off right now. Literally getting daily payouts from them is the most fucking crazy thing on a prop firm ever. So make sure you go check that out and follow me on all socials. Join my free Discord community as well in the description. Love you guys all so much. We are on an absolute heater right now. Hopefully we can keep this thing going. I'll see you guys all tomorrow. Peace.